Hello everyone, welcome to my channel. On today's episode, I'll be teaching you how to analyze the chart for synthetic indices pairs. Yes, we'll be drawing support and resistance, trend lines, liquidity. I'll be showing you how to pick your demand and supply zones on the chart, how to set your Fibonacci, and best of all, if you stick to the end of this video, I will teach you a strategy that works like crazy for volatility indices. Now, this strategy has a high win rate, and when you apply it, you will definitely stop losing your money to the market and you start making a lot of money. So let's head into this. First off, what are synthetic indices? In case you don't know, synthetic indices are financial instruments that simulate or imitate market price movement. They are not actually tied to any real asset or any global event. They are basically algorithms that imitate the movement of normal markets. So the same way your Euro USD, GBP USD, XA USD moves is the same way your synthetic indices pairs will move. These synthetic indices pairs are available 247. You can trade them Monday to Sunday, non-stop. There's nothing like news affecting you, nothing like market is closed on weekends. Market is always open, even on Sunday morning. Of course, you should know some of these synthetic indices pairs. The most popular one, Volatility 75, there's Volatility 25, Volatility 50, there's Step Index, Boom and Crash, so on and so forth. Now, you won't just find these synthetic indices pairs anywhere. You need to have an account with a particular broker because it's only one broker that offers these synthetic indices pairs, and that broker is Deriv. To help you register quickly with this broker, I have added a link that will take you straight to the sign up page in the description of this video. So use it, register, and you get access to complimentary bonuses that comes with that link. Now over to analyzing these synthetic indices we're talking about. First of all, let's look at the chart for this pair. Come on your browser and type Deriv. Just Deriv TradingView, search it on your Google. On your search results, ignore this one that is sponsored results. Go to this one from the Deriv website that has this URL, charts.deriv.com. I've also added a link that will take you to this chart in the description of this video to make it easy for you in case you are confused. So let's open these charts here. Now, normally we are supposed to go to tradingview.com for us to see the chart for our forex pairs. That's where you see GBP USD. But for you to see synthetic indices, you need to come to a different site entirely, which is here we are now. And you can see on the screen, we are seeing the charts. This is for Volatility 25 index showing right here. This is where you now start drawing your lines, drawing your trend line, drawing your support and resistance, everything on this page, and of course, save it. Now let's talk about these charts. How do you operate around this chart? Now this area here is where you select the time frame. You can select the 4-hour time frame. What it simply means is that every candle here is formed within 4 hours. That's the meaning of time frame, okay? Within 4 hours, this candle is formed. Within 4 hours, this other candle is formed. In the next 4 hours, this candle is formed. If you go to the 5 minutes time frame, what it simply means is that a new candle is formed every 5 minutes. So let's go back to our 4-hour time frame. And over here is where you select the particular pair you want to see the chart for. Okay, right now we're in Volatility 75. So when I click on this area here and I clear this thing, you can see all other synthetic indices pairs here. You can see all the volatility indices right here, and you can see step indices. You can see boom and crash, boom 600, boom 900, boom 1000. All of them are right here, jump indices. This area here is where you select your indicator. Let's say you want to work with an RSI indicator. Just come here, search for RSI, stochastic RSI, click on it, and you can see it's showing right here when it's overbought, we sell, when it's oversold, we buy, something like that. I'm not using indicators in this video, so I'll just clear it. Now settings over here, this setting right here is where you can change the color of your candle. If you want to change your candle to black and white or to any color of your choice. You can also do some other customization, play around with it, and you know how to navigate through it. And of course, here where you see save is where you save your progress so far. Let's say you've drawn all your analysis and you want to save it, you click on save right here, and you'll be asked to use a name. Let me use testing chart, for example, and I can save it. Yes, you want to draw all these lines that we draw on the chart. You want to draw all this support and resistance. On the left here is where you see all the tools you need to draw anything you want to draw on the chart. And you can see here, I have this bar here where I have the favorite tools I like to use. They are here. And if you want to create these tools for yourself, just go here, search for the tool you want to use and start it, add it to your favorite. So if I remove it from my favorite, you can see it's gone here. When I start it again, you can see it's back and I can move it to any position I want. So if you want to draw a support line, you are just basically to use this box. You basically use this box here, draw your support, hold it and extend it simply. If you want to draw your trend line, come over to lines. You see trend line just here. I've added it to my favorites. Use it and draw your trend line. If you want to draw a horizontal line that extends throughout your screen, use ray here all the way to the other side. So yeah, you can see the line is very long, and I can edit these things. I can change it to 4 pixels. If I want it to be bolder, I can change the color to black. If I want, reduce the pixel to maybe 1 pixel. Yes. Same thing, you can adjust the color of every other tool that you are using. So let's discuss some key terms. So let me explain the normal movement of the market to you. So normally on an uptrend, market moves up, down, basically higher high, higher low, higher high, higher low. Yes, this is the way market moves. And if the market is trending downwards, it's going to move. Now this point here is a high. This point here is another high. This point here another high. This point here is called a low. This point is called a low. Same thing on the downtrend market. This is a high. This is a low. This is a high. This is a low. So a low is basically a turning point that has a V shape, and a high is basically another turning point that has an N shape. Now, if you look at this closely, you see that at a certain point, price took out this high. All right, price took out this high, and that point is what we call a break of structure. Break of structure. Yes. Now the same thing happened here. Same thing also happened, here as well. Same thing happened here downwards. So this is a break of structure to the downside, another break of structure to the downside, another break of structure to the downside. Now I'm explaining these key concepts because we'll be using them in the strategy that I will teach you in this video. So you need to clearly understand them. Now let's go over to the chart to identify these things in real life. Now you see, let's go to the 15 minutes time frame. You can see what I was saying right here. Let me use this. Higher high, higher low, higher high, higher low, higher high here, higher low, higher high, higher low. Like that, you can see the market is moving in that same pattern. This is an uptrend. Okay, now I'm talking about a downtrend. You can see a high, higher low, lower low, lower high, lower low, lower high, lower low over here, lower high over here, lower low over here, just like that. Another thing you need to know is before you call any point a high or a low, you need to see a red and a green candle there before you can say this is a high. So right here you can see this is a green and a red candle, so you can call this a high. This at the bottom is a red and a green candle. You can call this a low. So you must see a red and green candle at that turning point, that V or that end point. A green and red candle. This is another high. Okay. Structure was broken here. This is a high. Green and red candle. This is a high here. And for break of structure, before you can call any point a break of structure, price must have closed below the line or above the line. In this case, it's below because it's a downtrend. So you can't call this a break. This is not a break. This candle is just the wick that touched it. The body ended here, but then it went up and then it came down. This is where the break of structure happened, right here. So you can call this a valid break of structure. Here, this is not a break of structure. You can see this is the wick of the candle that is touching the line. This is not yet a break of structure, but then when we extend the line, you can see that price eventually closed under the line. The body of the candle closed under, so we can call it a valid break of structure now. So over to support and resistance. What is a support? What is a resistance? A support is basically an area where price is finding it hard to break below. Let me show you that as an example. You can see right here that price came down here, first touch, it went up, came here, touched this area again, went up, it touched it again and again. So this area here now is a support because price is finding it hard to break below. It keeps touching and bouncing off, touching and bouncing off. That's a support. Now resistance is the opposite. Resistance is an area where price is finding it hard to break above, basically. So just like this area now, you can see how many times did price come around, how many times did price come around this area. It came once, came twice, came 3 times, came 4 times. So once price touches an area twice and bounces off, we know that that area now is a resistance. And if it touches it twice, down, then that area is a support. The more it touches, the stronger the support and resistance level. Now, what about trend lines? Now, sometimes price tends to go up or down in the form of a slope. So just let me look at this now, for example. This price keeps going up and is in kind of a straight slope line. That is basically a trend line. So you get your tool and you mark all the lows that are forming that straight slope. For a sell trend line, you pick up your line tool. Look at this one, for example, is a sell trend line like this. Now, trend line is not just a line, it's an area. So sometimes price will touch the line above, or it might not really touch the line, but it's basically an area of price that is in form of a line. That is a trend line. Now that you've understood the basic things you need to know, let me now teach you the strategy that will make you a lot of money trading. Are you ready? I'm sure you are, so let's go. So first of all, for this strategy, number 1, we are going to be looking for, this is the strategy. So first of all, we're going to look for a demand and supply zone in the 4-hour time frame. So what is demand and supply? Demand is basically the last candle before a massive buy in the market, and the supply is basically the last candle before a massive sell in the market. Let me show you. So let's go to the 4-hour time frame. Let me show you a massive buy. Now look at this candle. This candle is a massive buy from, look at this. Sometimes we call it Marabozo candle. This is a massive sell from here to here, massive sell. This is another massive sell. This is a massive buy, massive buy. These are not massive sells because you see they are not big and long and strong. You can see this is a massive buy. So a demand is basically the last candle before a massive buy in the market. So what does this mean? In this situation, this is the last candle. This red one is the last candle. Then this one is the massive buy. And a massive buy usually comes with what we call a fair value gap. Now, what is a fair value gap? A fair value gap is basically the space between the first candle and the third candle within 3 consecutive candles. Now look at this. This is the top of this first candle. This is the bottom of this third candle. So you can see there is space here. So right here, this is the space. This space now is called a fair value gap. Okay, fair value gap. Let me show you more fair value gaps. You can see here, this is a small candle, then a massive buy. A massive buy. Okay, so, and this is a fair value gap. You can see space between the first candle and the third candle. Okay, and another thing you need to know about supply is a demand, a valid demand and supply is the last candle before the massive sell or the massive buy that caused a break of structure. So in this case, this is the break of structure here. A break of structure happened here. And this is the massive buy that caused the break of structure. And this is the last candle before that break of structure happened. So this is our demand zone. This red candle is our demand zone. Okay, that is where we are going to be waiting for price to come into. So I've showed you the first demand. Let me show you another demand. Now this is a break of structure, right? Yes, this is a high that was taken out and this candle closed above it. Yes. Now where was the last candle before the massive buy that caused the break of structure? Right here. This is the last candle before the massive buy that now led to the break of structure. Okay, are you seeing this? That is how you mark a valid demand. So now let's talk about supply. Now for supply is the last candle before the massive sell that caused the break of structure. So in this case now, this is the break of structure, right? Yes, this is a break of structure. Now, where is the last candle before the massive sell that caused it? Right here. So this is it. And you can see price came, tapped into it, and went down. You can see our point of interest are valid. So let me change this to a valid, because not all demand or supply are valid. A valid. So how do you know that a demand or supply is valid? Because it caused a break of structure. Now, I've showed you how to identify demand and supply. After we identify demand and supply, we move over to step 2 of our strategy. Step 2 of our strategy, we will wait for price to come into this demand or supply zone. When price comes there, we are now going to do what? We are going to scale down to the 15 minutes time frame and check for a break of structure. Let me write it down. Step 3, we look for a break of structure in the 15 minutes time. Price has to come and break a high or a low. That's what we call a break of structure. So now after that, this last one is optional. We wait for a retracement into the break of structure. Then we enter on the 5 minutes break of structure. Another break of structure in 5 minutes. Now let me put this into practice. I say step 1 is to find a valid demand and supply zone in the 4 hour, which we already found here. You can see this one is a valid demand zone in the 4 hour. Then we wait for price to come into it. Price came into it right here. Let me use a circle to mark this area so that we don't miss it out. This is the point, right? Yes. Then we look for a break of structure in the 15 minutes time frame. Let's scale down to the 15 minutes time frame. Let's go over here, 15 minutes. This is the circle. So price came into this our POI. Let's say this one wasn't there yet, okay? Because this one wasn't there yet. So this was the break of structure we marked. Price coming down here. Where is our break of structure? Are we seeing a break of structure? This is a high. Then yes, I'm seeing a small break of structure right here. The candle closed above it a little. The candle closed above it a little right here. Yes, the candle closed above the wick a little. So that is where we'll take our entry. Long position here. Again, if you want to choose long position, the option is on the left here. Just look for it. This is it here. I've added them to my favorite as well. And we are going to target where the next high. So this high here is where we are going to target, where price was coming from. So you can see we're going to enter this trade, and let me set it up properly. Move the stop loss a little below everything. And you can see this is a 1 to 5 hour trade. And did it play out? Yes, it played out perfectly. Gave us TP. So you see, this strategy works like mad. Price moved. And I'll show you again. Let's go over to the 4 hour time frame. This strategy works best when market is in a trend, okay? Not when market is consolidating. It works best when market is either going up or coming down. Now, when price broke structure, it came down, and then it broke structure again right here, is it not? And now, what is our demand? Our valid demand or supply is the last candle before a massive buy that broke structure, or the last candle before a massive sell that broke structure. So where is the last candle before the massive buy? This is it here, right here. Okay, so this is our new POI that we're waiting for price to come into. So what does step 2 say? Wait for price to come into demand or supply. So price came into this demand zone here. Then what's the next thing? Look for break of structure in the 15 minutes time frame. We'll go to the 15 minutes. Where's our break of structure? Do we have a break of structure 15 minutes? Yes, we do. This is a break of structure. True or yes? True. Yes. Then remember the fourth option said sometimes I wait for a retracement into that break of structure and enter on the 5 minutes break of structure. So let's do it for this one. Now this one is optional. You don't have to do it. If you do it, you might miss on a few trades. But then if you do it, you can have a higher RR. Imagine you enter lower here. Instead of entering here, imagine you enter here. You can see your stop loss will be smaller. Okay, so let me just show you. Let's go to the 5 minutes time frame and wait for a retracement. You can see after the break of structure happened, price came back into, after price broke it, price came back into it and then give us another break of structure here in the 5 minutes. Remember, this is a high, this green and red candle is a high, and then price closed above it. So this is where we'll now enter a trade. Okay, so our entry on the 5 minutes is almost the same as our entry on the 15 minutes. Not bad. So this, and then what are we going to target? We're going to target the next high. So we're going to target all the way to the top. You can see this trade is going exactly as we have predicted. And this is this is ratio is 1:4.5 RR. Beautiful. I'm actually on this trade right now. Let me show you on my screen. I'm actually on this trade and I'm up in profit. You can see I'm in over $1,000 profit on this trade, which is amazing. You can see we're almost at TP. Lovely, very, very lovely. But then there are other cases where sometimes price will not come into your supply zone. Let me look for those cases for you and show you. Take for example this case now. We had a break of structure going up, right? We had a break of structure here, yes. Then this was our demand zone. This was our demand zone. But you see, we are waiting after because we were waiting for price to come in. Price didn't come in. It went up and broke another structure again, going up. So when it broke a second structure here, we are going to forget about this one. Okay, we're going to forget about this one and watch the next leg. Now in this second leg, there is no valid demand zone. This red candle would have been a demand zone, but there is no fair value gap on top of it, so it's invalid. So we don't have a POI. So with this now, you can see price came down. It broke structure again. So broke structure again. This would be our demand zone, right? This is the last candle before the massive buy that caused it, right? But then we were waiting for price to come back. Price didn't come down. Price didn't come back to our POI. It came down and broke structure again. So that means we are going to forget this one. Okay, we're going to forget this one and mark our new POI, our new demand zone, which is this one. I'm waiting for price to come to it, and then you can see here price came to this demand zone. But then if you scale with this, you can see this is a sharp movement downwards. That's why I have other steps in my strategy. You have to wait for 15 minutes confirmation here, because it's not every time that price comes to that POI that it buys. Okay, price came to this POI now, it did not buy. If you scale to the 15 minutes, you see that there was no break of structure in the 15 minutes here. Then another thing you need to know is that sometimes my price might not come and touch your box. Let me use this one for example. Your box might be something like this, and then price might just be remaining very small to touch it, and then you can see price just went from here straight to our TP. Okay, with your Fibonacci tool, you measure from the top to where price is coming from. Okay, if price has touched 0.703 points, then you can actually take that sell, even if it has not touched here, as long as it's close. So if it comes close and is already at 0.703, which is 70.3%, then you can look for your 15 minutes confirmation and enter your sell. To make your Fibonacci look like mine, let me click on settings, and you can see my settings right here. I only have a few of them showing, so you can pause this video and copy my settings, or only select my settings on your chart. Remember this point here, price did not respect this POI, and it broke structure to the downside. This is where the break of structure happened. I'm showing you guys how to pick up all these things. Okay, it happened in this candle. So this is supposed to be the POI for this trade, but you can see price didn't come there, and we are going to ignore it because price broke structure again, going down. So we'll forget about that point. Then the next POI will be this point here. This is the last candle before the massive sell, and you can see price now tapped into it and went down to our TP. So you can see this is a very, very lovely strategy. Just follow the rules and you will make a lot of money for yourself. Okay, so my trade is almost at TP. I took this trade in the morning hours, and now we are running to TP. That is very good. Yeah, so that's it for this video. If you learned something from this video, let me know which part exactly is the best part for you. Drop that in the comments. If you have any question about anything I've discussed in this video, you want to ask a question, drop it in the comments. I'll answer you as fast as possible and as clearly as I can. Okay, also when you start to make money from this strategy, by applying this strategy, I want you to come back to this video. I want you to drop your comments, share your results with all of us so that we can know that, okay, this thing actually works. Remember to use the link in the description to register for the Deriv broker, because when you use that link, you'll be getting some sweet bonuses, okay? And of course, like this video. It helps others out there to find this wonderful video. Subscribe to the channel, of course. You can see the amazing content you are watching right now. I'll be dropping more and more stuff like this in the future. So make sure you're subscribed. I mean, it's free, right? It's free. So that's it basically. Swiss strategy, it has over 75% win rate on these pairs I'm telling you. Volatility 25 and Volatility 5. It probably works on other pairs, but these are the two that have back tested this strategy on and they work very well. Volatility 25 and Volatility 75. Trade smart, make money. I'll see you in the next video.